Hey, good afternoon. It is Wednesday, August 1st. It is 2:58 p.m. Market is just about ready to close. We've got about 10-15 minutes left in the electronic session. It was overall a down day today in the markets. The yen actually poked above, up a little bit on its pullback, but by and large, the net change was down for across the board. Um, and then there were some markets that, got a little bit more juice out of that down move than the other markets. The equity indexes pulled back after the economic reports, pretty much. The NQ made its way up to the prior day high off of that Apple report and broke it, got a little bit higher, and then faded pretty much at that prior day high R1. So the trade of the day was fading R1 up here. And I think we saw that in the room this morning. Saw it called that trade. Oops. Give me 1 second. But by and large, the markets were inside the prior day range pretty much the entire session. And there was a lot of chop during the RTH session. You can't really see the wicks, but they were very much wiki day. Here was a shorter time frame chart, and there were just sporadic bursts of a directional move, and then pretty much an immediate retracement type, sideways price action. Very few runs. Here was a nice little run. Looks like from 10 until 11 down to the close. And there's some heat on that. There's your moves. And that was about it, I think, for today. Got a little bit at the open. And this last bit, now coming back down. I've got a new volume indicator that I'm really liking a lot. It's pretty simple, really. It's using Chameleon on top of volume and just choosing a ratio. And that shows you a ratio that you set to a prior bar or bars. You can set those to your own preference. And then running momentum on the SI swings indicator, shark indicator, swings indicator. And so that you can see really clearly not only momentum breaks, which are great, breakouts of momentum after consolidation, but when you get that correlating with a volume spike, that usually leads to higher highs and a breakout. Similarly, you can tell a volume spike that this one, the price went up. You can just look at the monitor, the momentum indicator, and see it. And sometimes you get volume spikes and price goes down. And then again, you can use this like an RSI. Wait for your trend line breaks on volume. And then it went down, and you can either try to get in as close as you can to the top or on the break. So there was a cross and a recross. And came into this prior bar, bounced, and then broke again. So you're getting your breaks. And hit those. Another and then it goes sideways. So you can tell pretty much what price action is doing just watching the momentum on the bottom. So having this momentum with the volume has been really nice today in the room. I've enjoyed it, and I think the guys enjoyed it too. So here's that example of that volume spike. Michael, check this out if you're watching. Big volume spike, and then it reverses. And you can see these prior highs that it bounces on, and this is price action bouncing on these levels. So you can see that price is going to your momentum levels pretty much, because that's where it's going right to these resistance. I mean, can you see this? Going right to those resistance levels and bouncing. I'm going to get my arrow to go straight, and my line to go straight. So my sister was the artist in the family. I have no artistic ability, as you can tell, but I certainly know what a trend line break looks like. There's your retest, and it took off again. So I'm going to really be liking these volume indications. It's so much easier than seeing it just printed by itself, which I could never understand. You know, who can understand volume, right? Well, now we can. And so at the end of the day, market's selling off now, pulling back in. And it's nice to see volume leading price direction. But Billy had asked, is this like a leading indicator? And I'm like, I don't know. That was a good question. I don't think it is, because it could go both ways. You can get a volume spike and then there's nothing behind it. It's like an empty airbag. And it just, you know, the vacuum air comes out of the vacuum and price starts falling. So it doesn't always lead to a directional move. No, so I guess it's not because of that. It can be, but it can also not be. It is a versatile indicator. Okay, so tomorrow we've got nat gas inventories, and Friday, don't forget non-farm payroll. And with today's employment number, 213,000 jobs added, you know, way to go, and wages are up. So we've got the perfect Goldilocks moment yet. People must be paying their credit card bills off because they're not buying stuff yet. So the inflation is low, relatively speaking, even though people are working. So it sounds like they're either saving money or they're putting it to paying bills. And so that's really the perfect scenario for these markets. But unfortunately, we've got these tailwinds. The equities are struggling on that quantitative tightening, although the Fed was very soothing in its report today. Very short statement, no fuss, and they said that they're going to remain quantitatively easing, but at the same time, they're watching uh, everything like a hawk, the tariff situation, growth, manufacturing, everything. So I think we're in great hands, and I think the market's probably, since it's August, they're going to go sideways off of that little bit of a miss on the ISM report this morning. So I would say flat, but certainly not spiking down as big as a correction. I think that other people were trying to pull everyone into. I mean, it may happen, but take a look at a daily chart real quick. When you accidentally see this, or it's not accidentally, this indicator accidentally can't calculate, you need to add like double the amount of days. the linear regression requires extra time periods for that calculation, and so just add the number of days and the indicator will correct itself. And that applies to minute bars or tick bars. Sometimes if you have 3 days for Rico or something, you'll need to go back in and put at least 10 or 20 days on it if you're using the LRT lines indicator. So at least double what the original amount required was. So as I thought earlier in the week, let me get rid of all these lines. 7150s really held. We didn't even get the wicks yet, so we could be getting the wicks. Week is not over. I'm just picking this as a round number, and because it, not to be, exact or anything, but somewhere around there it came right down to it. So we'll see if we can get this to hold. And it's sort of our line in the sand long above it. But this definitely is looking like a head and shoulders top. Left shoulder, head. So all we need is the right shoulder. And it looks like the neckline would be right there. So when it goes through first, it could hit the bottom here, but it's probably going to crash through it. And then come up to the rising trend filter, and that would be your buy-sell decision. And that is looking like 6,900. Told you I can't draw, but so something like that. $7,000, 6,900, 7,000. One of those two. If the 7150 breaks, but it sure looks like it could. If that's going to be a head and shoulders. All right, we see the pattern. We'll be ready for it, and we'll catch you guys later. Don't forget the open house next week. Thank you so much. Bye-bye.